Okay, this is Daniel Rowe with TradeThePlan.com. What is today, the 5th? I think it's about 5:30. Today I'm going to go over a couple of short setups that we had, one in Crude and the other in the ES, the S&P 500 futures. I didn't actually trade these two as I was busy working on something else, but I think just going over these couple of setups will give you a better understanding of what it is that we look for a trade setup, and I'll show you how everything kind of came together for these two swing highs, one in Crude and one in the ES. So just starting from the higher time frames and working down, this is the 138 minute chart. So we've been coming down, straight down to that lower median line, 78.6 retracement. For some reason, Crude seems to really love these 78.6 retracements. So I'm not sure if this is, going to be a reversal. That's the major low, higher low, and then go up. It could be because today was an extreme density churn bar. So we've had a lot of demand come in today as it's been chopping around in that tight range. But anyway, once we made that low of the day and we started going back up, we went up in what looks like an ABC. So working our way down to the hourly chart, just looking at these two channels here. This one, we've come down to the midline, found support. Like I said, it was also that lower median line, the 78.6 retracement, that 200% extension of the previous down move. And then this channel is what we have seemingly found some resistance on before, at the high before today's low. And then as we're retracing back up in that little ABC, we come up and hit that again. So that's not nearly as important as the subsequent areas I'm about to show you, but that's at least, kind of the bird's eye view of the higher time frames. So then from the half hour, I've got that same channel on it with the midline that we've retraced back to, but then this is just kind of a weird one. But anyway, it does at least provide an area. It's not the greatest area, but it is an area, the channel that we've pulled back to. And then on the RTH chart, 15 minute, we've got that median line coming down perfect right there. From the 15 minute down, we're starting to see these massive volume signals at that retracement high today, that little C wave high. So it's a huge amount of relative volume, 284.85%. And it's actually an extreme density climax there. So a huge amount of volume. And then down to the 10 minute, this is where we're seeing the overlapping areas. So just connecting that low, previous low, to the low of the day. That gives us the slightly downsloping trend channel as we're coming up into that high, and then we get that huge amount of volume that comes in, and rather than taking it through those areas, it cannot get through them. So that's obvious supply coming into the market there. And then just using this major downsloping channel, this is something that you would hear me say all the time, just connecting from the low before the high to the lowest low, parallel from the highest high between the two, which gives us that downsloping lower median line that we found support on at the low, and then just doing a copy of that and then bringing it up to that higher low right there. And that's what we came up and tagged. Now that's not quite as important. It's just, an extra area. But then on the 5 minute, I'm drawing in this one, which is the first low before the high down to the lowest low. And that's the main downsloping area that we have. So everything lined up there beautifully. We have bearish momentum divergence. You've got a big, huge 2-bar pattern, big climax into those areas, and the next bar is a very narrow range, a high volume bar. So very obvious supply coming into the market there. And then you can really see it on the 2 minute chart. Big volume. And then it chops sideways a little bit up there. Now this one is a very steep upsloping channel. So I've just taken a parallel of that and connected it to that lower high. But on the tick chart, well, let me go to this 1 minute first. This is the 1 minute RTH chart, RTH session, regular trading hours. And that's just connecting the high before the low to the high. And that's giving us just one more little area. Now on the tick charts, I've drawn in this shift median line. So anytime we have a really strong correction with a very strong A wave up and a kind of a shallow retracement, say less than 50%, I'll use this shift median line, which is drawing the median line from the 50% retracement between the low and the high, rather than affixing that median line from the low. So this is the typical median line right here. And then this is the shift, which nails it perfectly. And then it's just a huge, huge 2-bar pattern on the tick chart with, what is that? Over 1200% relative volume on the tick chart. That's insane. So beautiful confirming volume for that short. And then as far as the automation that we have here, I've got the areas in the market geometry. If we have 2 or more opposing areas being reached on 2 different charts, then we'll get the bloodhound signals in the same panel as the divergence analyst there, the bottom panel. And then the top panel is all of the volume and momentum divergence confirming signals coming together. As long as we have that ABC style correction on one of the operative time frames, which in this case, the operative time frame for the trade is that 5-minute chart. So those little signals in the same panel as the divergence analyst are coming from this logic manager, which contains all of the logic for finding those ABC style corrections like we have here. Little A up, B down, C wave up. So all of that comes together for the shorts here, and then when the 2 line up, the market geometry signal and the confirmation signal, then we get the main entry signal on that row 1 chart. And let's say that I would have entered that short, I would have had a very tight stop on it. Just to give you an idea, let's say I got in at about right there. It wouldn't have to be more than about 20 ticks max. So my first target would simply be the bottom of that upsloping channel, which would have been right there. Let's say I took both of them off there. It's still a 6-to-1 reward to risk, which is huge. So pretty cool, huh? If you didn't want to hold overnight, which in this case I wouldn't have, just because of the fact that we've already turned up strong from those areas on the hourly chart or 138-minute chart, that upsloping lower median line, that 78.6 retracement. So, yep, that's it for crude.